What's up everyone, welcome to another market update video. Now I actually recorded this video 2 days ago, but turns out the audio was completely unusable. So here we are again, recording another one for you guys. So without any further ado, let's dive right into it. In this video, we're going to talk about Bitcoin, we're going to talk about Ethereum. But before I do dive into the video, just wanted to give a huge shout out to Trading Accelerator. Tons of people are already getting mad results from it. For those of you who don't know, last week I launched my completely free trading course that teaches you everything that I know, basically all these like liquidity concepts, the way that I mark out levels, the way that I can predict exactly where the price is going to go, such as with this long position here, for example, as well as the fact that I seem to have confidence when I'm reading the charts, and maybe I just feel like I'm someone who knows what I'm doing when I'm speaking about the charts. If you would like to get that kind of result for yourself, you can get it completely through Trading Accelerator. It's completely free. It's no BS, no fluff. It's just pure value. I understand that most free courses are absolute just horse crap, only teach you the most basic of things that don't really help you. This is different. If you are interested, I will be doing another launch later this week, so make sure you sign up to the waitlist down below. But otherwise, let's get right into the video with Bitcoin. So what is going on? Well, last week I talked about the fact that $30,050 needs to be broken for there to remotely be even the slightest chance of a bullish scenario. Well, you didn't really get a candle body close, but you did get a wick. So in the video where I recorded with the unusable audio, I did come up with this long idea, but let's talk about it. So first we're going to talk about the bullish scenario, and then we're going to talk about the bearish scenario. So bullish scenario wise, I was just talking about how even though we didn't get a candle body close on the daily chart, there might still be a chance for the bulls for Bitcoin to return back to 35,000. And the chance is going to be right here, because on the 4-hourly chart, or basically just any chart below the daily time frame, you can see that it has done quite an aggressive move towards the upside. And in that process, it has left behind a very clear order block right here. And obviously you can see that at the time where I recorded the first video, price was still doing its thing during the weekend. But as you can see on Monday, it just filled the order block and has taken off. So this is a very good sign. The fact that you filled the order block and took off, immediately, maybe, just maybe, the smart money is interested in bringing Bitcoin higher. So this is the final opportunity. Like basically, if this order block doesn't hold and it gets broken through, then it's just going to become a mitigation block like this, and then price is just going to form new lows. So is there a risk that this trade right here could fail? Absolutely. Just like with everything else in trading, there is always a risk that you will fail. But I would say that this is a pretty calculated risk. The fact that you can risk 1 unit of risk to get back a potential 19 units of reward, I'd say that's pretty worth it. So that is the trade idea that I have for Bitcoin towards the bullish side. Don't know if this will play out yet, but that is the idea. And I understand that this might be a subpar trade just because we did not get a candle body close above those previous highs on the daily chart nor the 4-hourly chart. But again, this is a calculated bet. Could it fail? Absolutely. Is Bitcoin looking more bearish than bullish? Absolutely. But still, calculated risks are calculated risks. You don't really lose too much from taking calculated risks. All you lose is 1 unit of risk. Doesn't really matter. So now let's talk about the bearish scenario. Well, obviously, this whole thing is still looking incredibly bearish. And for those of you who haven't been following along the channel for the last 3 to 4 weeks, let me just break it down for you. Right here, you have a range, you have broken below the range, and currently you are struggling to even trade back into the range. Every time you come back into the range, you have very clear candle body closes towards the downside. You have very clear bearish market structure at the moment. And until that changes, I'm not going to change my mind that Bitcoin is looking bearish. Now, I am one of those people for the last probably like 8 to 10 months. I've been talking about a 35k Bitcoin. I was one of the earliest ones to be talking about the fact that you should be buying here, right? Right here. You should be buying. So trust me when I say that I would really love for Bitcoin to go to 35k as well, because I do have quite a big bag. But the reality is that as a trader, it is our job to read and react to the markets based on whatever it is telling us in an objective manner. It is not in our job to predict or to come up with like biases like, oh, I really want Bitcoin to go up, so I'm just going to keep holding on to my long. Doesn't really work that way. If the market is telling you that it wants to come down, you better listen until we get some sort of bullish market structure. Like this could be it, by the way. Like here, this, if you go into the 4-hourly chart or even the 1-hourly chart, this is a high, right? This is a high low. Now we just need a high. Like once we get that high, boom, we are fully back in bull territory, and 35k is going to be no issue. So in the grand scheme of things, it's probably just going to look like that's your market structure. You have a retrace, but then that retrace just swipes liquidity before forming new highs. This retrace just swipes liquidity before forming new highs. And again, this retracement is just filling in some imbalances before forming a new high. So that's how it will look like on the bullish side. But let's talk about the bearish side for a moment, because it's always good to prepare for both scenarios. There isn't really much to talk about because we are still, well, as I've said before, we're bearish until proven otherwise. And basically any opportunities that you get, for example, buy side liquidity sweeps like this, where you swept out all of these highs, this is an opportunity for you to go short, because in sell programs, basically in bearish market structure, buy side liquidity sweeps tend to provide the market enough fuel to form new lows. To put it into an example, it would be like this, right? The market tends to, like, the market went up and then, well, it's just taking liquidity and then aggressive move downwards. Again, you see it over here. You take out the candle body highs, right? That's buy side liquidity. You sweep it and then you get enough fuel to form new lows. Same thing here, right? You sweep all these like equal highs here and then you get enough fuel to form new lows. So that is how buy side liquidity sweeps in a sell program work. And that's all you need to look for really if you are looking to short. But for now, this is the trade that I'm leaning towards at the moment, even though I am overall bearish. And the reason for that is because I don't really see an area where I would go short. Like this would have been it during the buy side liquidity sweep, but right now I don't see an opportunity at the moment. So maybe in a lower time frame there is, but this video is sort of a weekly video, so I don't want to talk about the lower time frame because that's not going to be relevant for, well, anyone basically watching this like a day or two after it is released. So that is the situation with Bitcoin at the moment. Hopefully you are prepared for both sides of the equation in order to make money. And of course the bearish scenario, or rather the bearish case, is still target remains to be 27k as well as 25k. So now that Bitcoin is out of the way, let's get into Ethereum. So Ethereum is in just a very random spot. You did not get any sort of candle body close above the, the previous high. And even on the 4-hourly chart, it's looking even weaker than Bitcoin. In fact, this is just a sell side, buy side liquidity sweep that is looking to, throw Ethereum even lower. So overall, Ethereum and Bitcoin does look kind of similar, but if I could put a number on which one is weaker, Ethereum definitely looks weaker than Bitcoin at the moment. And basically no change. It's pretty much similar to Bitcoin in the sense that you want to get a candle body close above 1880. I talked about this last week. We did not get it. We didn't even come back to 1880. So once you get a candle body close above that level, you want to look for a retrace into an order block or fair value gap or whatever, and then price to form new highs. This is basically the exact same setup where you get a high, right? You get a high, you get a higher low, and then you get a high continuation. Price just does its thing. If there is one piece of advice that I can give you, I always like to talk about the fact that as a trader, you don't get paid based on how many trades that you take. You don't get paid based on how much time you spend looking at the charts. You get paid based on the quality of your decisions. So if I had to pick something to go long, I would definitely pick Bitcoin. And if I would pick something to short, I would definitely choose Ethereum just because it is looking weaker than Bitcoin. So that is the way that I would approach it. So that is the bullish scenario on Ethereum. And now we get into the bearish scenario. Well, basically this is already the bearish scenario. All you have to do is just look for, order blocks, buy side liquidity sweeps or whatever. Like for example, on the 1-hourly chart, it would look like, oh, look, you have a change of character right here. That is assuming that you're bearish, then this would be your fair value gap. So notice how price trades back into the fair value gap and now it's dumping. So I would just look for setups like this where I would place my entry at the start of the fair value gap, maybe the end, the stop loss a little bit above the end of the fair value gap, or order blocks, and that is just how I would trade Ethereum all the way down. As for where Ethereum is going to go, the target remains absolutely similar. No change to the target whatsoever. If you're just someone that wants to take profit really quick, 1786, right, for the intraday traders. If you're anything outside of like an intraday or even a short-term trader, I wouldn't really look at this. Ideally, I would be looking at either range low here at 1650. TB2 for me personally would be at 1596. And then TP3 right here at 1425. So these are all swing trade type of trades. This will take easily a couple months to fulfill, especially if you're trying to go for the longest target. But overall, that is the plan for Ethereum. No change there. And yeah, again, I just feel like I'm talking about the exact same thing every single week. But seriously, no change for Bitcoin and Ethereum. They are just really boring at the moment. And yeah, nothing really much to talk about there.